Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about Bitcoin and its price action and what we might think about it going forward. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. We'll have updates, better indicators, and more over there. So I'm going to show some of our models here in a minute. But before I do that, let's just look at the Bitcoin chart here. So today has been a pretty notable day, right? We're up 4.67% currently as I'm recording this on the day. And what's really notable about this is that this is coming off of some very bearish news just a few days ago. Back here in or on Wednesday, there was the Fed FOMC meeting. And if you aren't caught up with what happened there, basically Jerome Powell just told the markets that they're delusional if they think that things are going to get better anytime soon, or that the Fed is going to have a dovish pivot anytime soon. And he basically just laid out a very hawkish stance that they're going to continue to raise rates and hold rates high for a long time. And in fact, actually raise rates to a higher level than they thought they would have to do even just back in September. And so markets reacted very negatively to that when it happened. Bitcoin was down 1.6%. The stock market actually reacted more strongly. So this is the S&P 500 down a whopping 2.5% on that day, and most of that loss, or pretty much all that loss, happened after Powell's comments at the press meeting that happened after the FOMC meeting wrapped up. So it's notable then that the market is rallying so hard off of the back of that, right? It's notable this is happening, and people have been talking about this. Suggests the stock market also had a nice move up today as well. People suggesting the market's not really believing Jerome Powell. Whatever the case may be, this is notable on the back of such a bearish event. Now, this could just be, a move to be faded then as a result, right? Or potentially not. So let's take a look at where we are. Some interesting things are going on. So if we put on the 20-week moving average, which is one that a lot of people follow, it tends to act as resistance in bear markets. You can see that we got rejected more or less off the 20-week back over here in March. We're testing it again. We have been rejected off of it. This first time we tested it back over here, then we just got through it. Then the 20-week also, acts oftentimes as support during bull markets as well. So it's a level that a lot of people watch. And so it looks, I'm recording this just about 15 minutes before the close today. So it looks like we're almost definitely going to be closing above the 20-week, which is notable. And so then if this move can continue, right, if we can continue to the upside, let's just think about some levels that we can watch. One that I'm going to be watching pretty closely is actually the 200-week moving average, because that's, again, this level that oftentimes seen as very important. Now, historically, it's one that a lot of people have looked at as being the bottom of bear markets, right? We talked about this before, back in 2018, back in 2015. Hasn't really so far been acting like that at all, right? We've been spending a heck of a lot more time below the 200-week moving average than we ever have before in Bitcoin's history. And so its ability to act as this floor is really, I think, pretty much been shattered right now. It's not this magical level that can't be fallen below. But it certainly would be an important level to watch. And also we can see that it's confluent with what was likely to be some technical resistance just as we get up into this zone here. If we are able to rally up to that point, it's currently at about 23.88K. I'd be watching that as a potential resistance zone to be sure. So, we can go ahead and take out this local high over here, then get up to there. I think Bitcoin might have to put up a fight to get above that. And of course, that's also, broader markets willing that, extreme bearish things happen to really shoot the markets down. But certainly this is a good first start, right? Getting above the 20-week, and if we can stay above there and continue rallying up, that's going to be the next key level I'm going to be watching. Let's take a step back and just look at some other data to think about where Bitcoin stands right now and where we think things might be heading. So let's go ahead and flip over to some models that we have here on the channel. I'm going to talk about the upside downside potential indicator for Bitcoin first here, the UDPI. So this is the long-term version of the model. And if you're not familiar with this model, it's a risk indicator. Higher levels are high risk, lower levels are low risk. And you can see it does a good job of quantifying these market cycle tops, these extreme overextension points that tend to then have these big drawdowns that follow them, as well as these low risk points as well that tend to market these good accumulation zones before rallies. So let's go ahead and look at the raw levels of the EDPI across time. So the yellow here is the Bitcoin price across time, white is the EDPI level across time. And I want to take a look at what's going on right now in relation to some previous lows of bear markets we've seen in the past. So, what we've seen is that in what has so far held as the local low back in June, going down to 17.5K, we got down below -4 on the long-term UDPI. And then, we've just kind of been hanging around but between -2, and -4 ever since. But what's notable is this is what happens at bottoms of bear markets in the past, or this is what has happened at bottoms of bear markets in the past. You can see that at the bottom of the drawdown back here in 2011, 2012, we got all the way down to -4 at, the bottom, and then it was up from there. The first time we crossed down there here in 2015, it was the bottom, and then, sideways and up from there. In 2018, first time we crossed back below -4 was at the bottom, and then off we went again. And so could it be the case that, again, this will end up serving as the bottom? It's possible, right? It's certainly possible. But does this mean that we have to just go shooting off to all-time highs or to some crazy rally, for example, like we saw in 2019? Well, not necessarily. Just looking at Bitcoin's history, we can see that's the case. So look at 2015 as, I think, a great example here. We basically just went sideways with Bitcoin for a year, just about, before finally then going and starting what ended up becoming that big bull run into the top in late 2017. But this time in the market right here would have been very painful. And you can see that just because we went below -4 the first time, we actually ended up revisiting it multiple times. In fact, we actually revisited it 4 more times after that, although price was appreciating through that point. And so if I'm just thinking about where we stand right now in the broader macro picture with markets, if June was the bottom, right? If it ends up being the case that June was the bottom, in some ways I'm looking back here at 2015 as maybe being a reasonable analog for what we might expect if this bottom does hold, right? Because I just think that things are so bearish right now, it would be difficult for markets to pull something like 2019. We have to remember that in this rally in 2019, the Fed had already pivoted, right? The Fed had been raising interest rates. The market, the stock market then kind of had a big correction. The Fed kind of gave in. They then started cutting interest rates, going back into QE mode. And then that was a very much more bullish change in the market that maybe then could allow for these big rips to happen. The Fed's not indicating any appetite to do that anytime soon. The broader macro picture probably isn't going to change all that much. If anything, it's going to get worse with a recession potentially hitting. Now, of course, markets tend to bottom before the most extreme of recessions hit, but I still think it's probably the case that there's some bearish, action that could be out there if we do get a full-throated recession. And so from that perspective, it just makes me cautious to think that any kind of extreme crazy rally is going to happen in the short term. Now, certainly I think there could be some upside volatility that could be profitable for people who are taking more short-term bets. Certainly possible. But in my more kind of longer-term outlook, I think that if June ends up being the bottom, if this ends up panning out like it has in the past and this was the bottom, I think that this might be more likely to be what we're looking at going forward. We just kind of chop sideways with some volatility before being able to put any kind of meaningful moves to the upside. So that's just kind of my base case. Not financial advice, obviously. You should form your own opinions of where you think things are going. But that's just the way that I'm kind of seeing it. But again, it is also useful to note, though, that it is the case historically that the first time we drop below -4, coming off of any kind of cycle high, that has actually been at the bottom. So it doesn't mean that this has to be the bottom, right? We could end up putting in new lows from here. It's certainly possible. But it is still accurate to say that that would be a first, right? This time would be different if that happened. And so that's just kind of the way you have to interpret it, is what is the likelihood that this time is different versus not? Plenty of reason to think it could be, given how bearish the macro environment is. But if a lot of that bearishness doesn't really materialize, or if a lot of it's already priced in, maybe we're actually going to see a similar pattern replay like we have seen in the past. But again, that might not mean we just shoot off to the upside. We could have some sideways chop for a while before seeing anything too exciting in the Bitcoin market. So this is a long-term UDPI that cares about moves that play over months, multiple months, more macro in its focus. They just want to show the short-term UDPI just because we had seen that pump today, just kind of see where we're at a short-term perspective, how much shorter-term realistic upside versus downside potential there is. You can see if the short-term UDPI is more extended than the long-term for sure. We're up above -2 here. And generally speaking, in these bear markets, you're kind of acting more in this lower bound, right? Getting up anywhere close to 0 tends to actually be a local top. So if this run were to continue, even though, the scale goes all the way up to 5, I wouldn't see that as being in play yet. I think, frankly, getting up towards 0 is about as best as we can hope for. But really, if we're kind of looking at some of these times back here as an analog, maybe getting above -1 might be a good target level that we could look at. But I would think that, getting up to around 0, if we do poke our head above 0 in the short-term UDPI, I would personally expect that run to be nearing the end of its steam, if we do continue to move up like that. So just another data point that we can keep an eye on, keep folks updated as that continues. Okay, so let's look at another model that we have here. So this is our trend indicator, one of our trend indicators here, the market direction classifier. And what it does is it generates this critical level here in yellow, above which the market is bullish. Basically, it would classify the asset as being an uptrend, below which it would classify as being in a downtrend. And so generally speaking, when you can flip from bearish to bullish, it's quite a good thing. You can get some pretty big runs coming off of one of those flips. Whereas, when you flip to the downside, you can get pretty big moves to the downside as well. Now, more recently, we had this one kind of mini rally that the MDC here caught more recently. Had this one, just a little bit of a fake out. We didn't get confirmation here. We just closed once above and then fell down below. You'll notice we're poking our head back above again. Now, this is red because we haven't closed green yet, as I record this. But we are above the MDC's critical level. So that critical level is currently at 20.8K. And, we're currently, as I'm recording this, we're trading above 21K. So if we close up there, this will flip green. Now, of course, I'd like to see some follow through to get more confident of this bullish reversal. But generally speaking, when you do that, you can get at least a decent amount of upside going on, even if you do end up then going back down and flipping back below it, decent upside to follow. And so I think it's totally reasonable to think that if we close up here, and especially if we could close here the next couple of days, some reasonable upside might be in the offing, and then we might go up and test some of those levels like the 200 week, or even if we clear above that, some of those higher levels in the mid 20Ks. Certainly is possible, something to keep an eye on for sure. Now, the final model I wanted to talk about today was the momentum bias indicator MBI, which can also give us a more macro perspective on what's going on right now. So this is a momentum indicator, as the name suggests. So if you're above 0, that means that there's a positive momentum bias that tends to coincide with bull markets. Below 0 is negative momentum bias, and then when you're down there, most of the time that tends to be in bear markets. So recently we've been in a classic bear market behavior on the MBI, and I've talked about this before, where you'll see yourself spending most of the time in the red, poke your head above 0 on relief rallies occasionally, but then just get rejected back to the downside. Now, what's notable at the MBI more recently is that, back here in the June lows, we set the lowest MBI level actually ever for Bitcoin, even below the COVID lows, which I think is a little bit notable. Well, we've been moving back up, and what I think is interesting here is that we're seeing this kind of uptrend on the MBI, which when you see that, sometimes can mean that things are starting to get a little bit better, right? When you start to see, especially if price is starting to move up and you're starting to get this movement up, setting in higher lows, that can be an advantageous sign. Like, for example, we saw through here, actual low being here, lower on the MBI, and then actually setting a higher low here before moving back up to the upside. Now, 2018 would be the example, the exception there, where we actually were kind of moving up and then had this big capitulation down. So it's not a guaranteed signal. But this is something that suggests that the moves to the downside, right, the strength of the moves to the downside are weakening more recently. Doesn't mean that a further one can't follow, but at least so far, we're starting to see kind of the strength of the downside momentum starting to weaken. And so what we'd really like to see going off of here is to come back up into the green and then start what I oftentimes talk about a lot, this kind of oscillation around 0, right? That tends to happen in these transitions between bear markets and bull markets, where you go down a lot of time in the red, start kind of oscillating, and then spending more time in the green, kind of equal time in the green and the red, and then that tends to lead into these big parabolic moves to the upside. We saw it, clear case of it here, you see it here before shooting off, see it back over here even before shooting off to the upside, and now we'd like to start seeing that again over here. And if we do, that might mean that that might be confirmation that this was actually the bottom back here in June, and that we're in a transition point. We're in an accumulation point in the market before potentially the start of a next bull run. Still too early to know, right? And it could be that we have a long time of that up and down chop like we did back over here in 2015, going over there towards 2016. So just because we start that behavior doesn't mean that we're going to get out of it anytime soon. What it might suggest is that we're starting to enter a new phase in the market. But in an oppressive bear market, oppressive downtrend, that would be a sign of maybe accumulation, sideways chop, before maybe being able to move back up to the upside a little bit later on. So obviously, none of this is financial advice. You just make of these data as you will. But I do think that we're in an interesting time in the market from the sense that, historically speaking, if we are transitioning from, bear market into accumulation, these are the times when building positions has been the most advantageous, been the most profitable, right? If you just go back, get these out of the way, look back in the history of Bitcoin, accumulating in this sideways chop back here in 2018, accumulating in this sideways chop back here in 2015, anyone now would have loved to have been one of the people accumulating in those zones, right? These are the times to be accumulating in the market. And it's, of course, the time when the market is the most boring. A lot of people have left. A lot of the kind of hype tourists that people only get in when the market is screaming to the upside are gone. No one's paying attention. Everything's kind of boring. That ends up being the time when, historically speaking, it's been the best to accumulate. So, of course, we don't know if this is that yet, right? We don't know if this is going to hold. We don't know if there's another further leg down. But certainly if it does hold, historically speaking, these have been the times that have rewarded people the most. So obviously up to you to make your decision on if you think that's where we are right now. But I think the data could support that. And I think as we move forward in time, and as we see things like how the MBI develops, if we see, the MDC stay bullish, if we can get some relief rallies, if we can start actually setting in, more support in this level, it could be a sign that, at the very worst, what we're going to be looking at is sideways chop before moving to the upside. So obviously still too early to tell, have to keep watching, but those are the things that I'm thinking about with Bitcoin right now. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, updates about our indicators and more over there.